पॉलिसी बाजार पर 1 करोड़ रुपए का टर्म लाइफ इंश्योरेंस केवल 450 रुपए महीने से शुरू। वाव!
Hello and welcome to NDTV 24/7. I'm Priyanshi Sharma. In this special show, we'll look at the year that was 2022, full of volatility, ups and downs for the Indian economy and for the markets as well. Lots to look back to and lots to also look forward to in 2023. So in this show, we'll break down for you the top economic concerns and trends from 2022, and we'll also address the top questions for the economy in the 2022 outlook. Let's start with addressing the past first. The top 5 of 2022. Number 1, Sensex and Nifty, the Indian markets outperformed global peers. They gained almost 3% while global peers tanked. Now, the Indian markets traded around record highs despite global headwinds. The World Bank said that policy interventions, foreign direct investment, foreign portfolio investments helped Indian markets remain shelter from the global headwinds. Number 2, Rupee traded near record lows. It went to as low as 83 against the dollar and fell by 12% just this year. This as foreigners consistently pulled out dollars from the Indian markets. The demand and price for dollars rose. They were taking money out from the Indian markets, selling rupees and going back to dollars. That was increasing the price and the demand for dollars, and that's why the value of rupee in comparison was falling. After that, forex reserves were also down by 12% as the Reserve Bank was selling dollar reserves to save the rupee from falling. Foreign portfolio investors also turned net sellers this year for the first time in 4 years. The last time they were net sellers in a year was in 2018. Foreign investors pulled money out as there were global recession fears and rate hikes also driving money out of emerging markets such as India. Next, the current account deficit of the country, which is the difference between the money we spend on imports and the money we receive for exports, that difference is at a 9-year high. This as our imports are rising, but our exports definitely not rising enough. Now, the point that impacts all our pockets. Inflation stayed above the RBI's 6% threshold. It even went to close to 7 to 8%. The GDP growth rate as well slowed to 6.3% in quarter 2, down from the 8.4% recorded in the previous year, quarter 2. Now, growth was hurt primarily due to the manufacturing sector, and inflation rose primarily after the war-induced supply chain disruptions, and that caused oil prices to really go up. Now, these are the top concerns of this year. Let's also look at what we should look forward to for the next year. Number 1, can inflation fall below 6% in April to June 2023? That is a question because that is what the Reserve Bank forecasts. Inflation was primarily rising this year because of the supply disruptions and oil price hikes after the war. Now that the global crude oil prices are back to the pre-war levels of around $80 per barrel, can we expect a relief for our pockets soon? We'll have to see that. Number 2, markets are currently near a record high. Will they continue the track and breach even these levels next year? If yes, then by how much? That's what we'll have to see. Number 3, rupee weakened to record lows of 83 to the dollar this year, but it has recovered slightly to 82.7 now. So will this trend continue? Can the rupee strengthen to 74 to 76 to the dollar values again, to the pre-war levels? Will we see those rates again? We'll have to ask those questions to our experts. Number 4, with the war still continuing, rate hikes are still being announced across countries. Climate change is causing fears of food inflation. Will these concerns hurt India's growth and could it increase inflation? Number 5, foreign portfolio investors this year pulled money out of India due to global rate hikes and also due to recession fears. Now, is a recession really looming? That's a beating question. Also, when will foreign portfolio investments revive from that war loss in India, and when could forex reserves be revived after they fell when the Reserve Bank of India sold forex reserves to control the rupee from falling even further? Now, we'll discuss all these points, all these concerns with experts in the show. We are joined by experts on this. We're joined by Mr. Dhirendra Kumar from the Value Research, and we'll also be joined by Professor Santosh Mehrotra, who's an economist. Mr. Kumar, if I can first start with you. Is a recession really looming? That's the beating question for the economy for 2023. Multiple agencies have said that. Multiple central banks have also said that, such as the Bank of England. What is your take? Is there a fear of recession, especially for India?
Actually, recession is not a matter of, speculation anymore in the Western world. But, in India, the symptoms are opposite. What we are finding is, not a recession, but a huge demand, huge pent-up demand that this may not be sustained. But fears of recession? No. In India, I don't see that looming fear.
Right. So you don't see that. And a lot of people say that India has really outperformed against other global economies, and Indian markets have also outperformed clearly against other global economies. Why do you think India is standing out? What are the points? What are the policies maybe that are working out for India?
No, variety of things, but primarily, it is what we were fearing, that, there will be a deceleration. In fact, there is a small likelihood that a critical sector for which, if stock market is an advanced signal of shape of things to come, then, maybe we have bad days ahead for the technology sector, because that is what is reflected in the market. They are down by a third in this calendar year, which is quite surprising, and first ever such decline in full year. But except for that, I don't see anything substantial which is decelerating our growth and demand.
Right, and the World Bank also said that policy interventions and the FDI inflows in India are helping the markets and are keeping them immune to what's happening globally because of global headwinds. Now let's talk about Rupee. Rupee touched as low as around 83 to the dollar, but we are seeing that it is slightly getting better. Do you think in 2023, now that the effects of the war are coming down, currencies are recovering, Rupee even performed better than other peer currencies. So do you think the Rupee could recover even more? If yes, then by how much? Could we ever see those pre-war levels of 74 to the dollar, 76 to the dollar, or even 78 to the dollar?
No, that is very unlikely. But, guessing the direction of the rupee, it is, it's almost like guessing in the short run, which is almost impossible. Because if you look at what happened, it is coincidence of, multiple factors at same time. Foreign portfolio investors pulling down, are in, import bills going up. So if all these things converge again, might be in for bad time. But generally speaking, the kind of revival that, we have seen a turnaround in the flows again. And likewise, we have been comforted by the oil prices, our biggest import item. So in that sense, if these two things become hostile, maybe, bad times ahead. But otherwise, I don't visualize any such problem right now.
But till when?
We've been very lucky.
By how much do you think could the rupee recover, if at all?
No, I think it's a bad idea to be guessing the value.
Right. All right. So let's also talk about one of the fallouts of the falling rupee is that forex reserves went down by 12% as the Reserve Bank was consistently selling dollars to save the rupee from falling even further. Even our foreign portfolio investors turned net sellers this year for the first time in 4 years. But now we do see that for the last 2 months, they are coming back. They are turning net buyers. Do you think this trend will continue? Do you think our foreign portfolio investments and also our forex reserves, can those be revived in the first half of 2023?
I think so. And I think the biggest hope is not only this, but the remittances getting revived, because we saw a huge disruption there. And that getting normalized now, people settling down at work, and the movement is relatively better. So I don't see a huge disruption there that we have witnessed in the past.
Right. Professor Santosh Mehrotra also now joining us. Professor Mehrotra, if I can first start with you on the recession point that we were just discussing. Mr. Kumar said that there could be a recession fear for the global economy, for the Western world, but India seems to be outperforming and India might not have those similar recession fears. What's your take? Is a recession fear looming for India?
Well, if not a recession, we certainly can't expect a very robust growth. Because we know we've had a rebound from the contraction of the economy in 2020, in FY21, that is. But whether that's going to be sustained is a bit unlikely. because private final consumption expenditure has not bounced up. We have to wait to see what the CSO tells us about the first advance estimates of GDP finally for FY23. But joblessness is high, and per capita consumption expenditure is unlikely to have risen very much.
Right.
And so that's unlikely to change. And inflation is still high currently. It may drop. We'll wait to see. Is the Ukraine war going away? We don't know. Secondly, is the government going to reduce taxes and excise on and cesses on petrol, diesel, gas? Well, it hasn't done so far. So I see no particular reason. Yes, it's true that the RBI has been raising interest rates, and because it's been raising interest rates, it's expected that inflation will temper. But because it takes about 3 or 4 quarters before inflation reacts to or responds to the rise in rates, but we will still have to wait to see.
Right.
Because there are other countervailing factors which might still be around.
Right. And in fact, you were talking about inflation. That is what I was coming to next. The Reserve Bank of India predicts that inflation might come under their 6% threshold by Q1 next year. Do you think we're on track for that? Do you think it could fall to around 5% and it could fall within the RBI's threshold, considering how things are going right now, that oil prices are also at the pre-war levels of around $80 per barrel?
Are you asking me?
Yes, yes, Professor Mehrotra.
Right. Well, as I said, that we still have the issue of imported inflation lurking in the background. Because it's not that the Fed is suddenly stopping raising rates. And if it's raising rates, the RBI may be forced to do the same, although it doesn't want to, and there is already a division within the Monetary Policy Committee. 2 members voted against raising rates this time. So, we might be between a rock and a hard place
Right.
if the US Fed continues to raise rates. But you see, all this talk about international influences on our inflation rate somehow abstracts from the window of opportunity that the government of India has, the Ministry of Finance has, which is on petrol, diesel prices.
Right.
And that depends upon the taxes and excise. And if it does that, if it reduces the taxes, the inflation rate will begin to slow down, and will begin to slow down quickly.
Right.
Because it's a massive input into other products and services. And somehow the government is not interested, which is unfortunate, because poverty is increased, everyone knows that. Unemployment is extremely high, and consumer expenditure may not rise, as I was saying earlier. So, all this somehow needs to be taken into account. If the government, look, the bottom line is somehow we tend to believe that, if 5% growth rate is fine for India. Well, it isn't. Because if we don't grow at least 7 to 8% per annum, given that we've grown only at 2.5% for the last 3 years, if you take into account the base of 2019-20, then you realize that you can't reduce poverty.
Right.
And we are the poorest country among the G20. Somehow we seem to believe that we are the 5th largest economy, fastest growing large economy. We have to grow fast.
Right.
That's why we've been the fastest growing large economy in the world for a few years, and the second fastest for the last 15. So
Right.
let's just not keep patting ourselves in the back in a context where the difficulties are somehow abstracted from.
Right, of course, we have to address those concerns as well. And as you were pointing out, that fuel prices really trickle down into inflation for various other products, including food, clothing, and practically everything that we use. So that, of course, is a question whether the government will cut fuel prices, will cut the excise duty on fuel or not. Now, from economy, let's also now focus on the markets. As we were discussing, Mr. Dhirendra Kumar, that markets hit record highs this year, and they really outperformed their global peers from what we can see on our screen as well. Do you think this year the markets hit, Sensex hit close to 63,000 and it's currently around 62,000. Do you think it will hit new highs in the next year as well? Do you think this trend will continue? And if yes, then how high could it go?
No, I don't know whether it is, I really can't guess it because nobody could have guessed what happened to the market last year. Right. So I think, but what I feel is that over a sustained period of time, if companies are able to grow their earnings substantially, and I don't see a deceleration of a large part of the market or the listed universe of the market, they haven't stopped growing. Maybe their margins are under squeeze, come down, but I don't see a calamity there.
So we'll have to see whether there are new highs that await the Indian markets. Professor Mehrotra, if I can come to you next to talk about the overall growth forecast. We know, as you've also pointed out, that for India, we need to grow at around 7 to 8% to be able to create enough jobs. Now, the Reserve Bank also predicts a growth of around 7%, but there are multiple agencies that have really downgraded India's growth forecast. Do you think that 7% estimate does seem achievable?
You're saying for financial year 23-24, you're asking?
Financial year.
Yeah? Yeah. Well, honestly, given, as I was saying, that the US Fed is still continuing to raise rates because their inflation is still somewhat remains high, the Indian Reserve Bank may have to raise rates. Now, that's going to dampen investment prospects. And if it dampens investment prospects, then, given that currently capacity utilization is running at 74-75%, this is not the rate at which investment happens. Investment begins to happen at somewhat higher levels of capacity utilization. And if rates are high, then it dampens animal spirits of the possible investors. Having said that, I mean, we can hope that if the rate hike stops,
right,
if Ukraine war ends in the next 3 or 4 months, which it could,
right,
then the prospects begin to look better, because then the fears of a deep recession, longish recession in the West would tend to temper.
Right.
And if those temper, then the potential for our exports reviving, and reviving is the operative word here because they have fallen, improves.
Right.
It also, what will result from that is also the fact that oil prices will perhaps stop rising. Or at least they will perhaps come down. If that happens, then the pressure is lifted off government so that it does actually reduce taxes and excise on domestic petrol and diesel. So, there are so many uncertainties. Honestly, at this juncture, it is for good reason that, international agencies, including the World Bank, IMF, and UNCTAD in particular have reduced our growth projections as we move forward, because they are actually expecting an international recession.
Right. Right, of course. So lots of ifs and buts there. And of course, the war also continuing. That continues to hurt the global economy at large with those recession fears also looming. Thanks very much, gentlemen, for joining us.